Hey guys, happy Sunday. It's been a very long time, and I know, a lot of you might have thought maybe I've gone offline and I'm not no longer doing this, but the truth is I've been extremely busy. Just a little bit of background story. I've been dealing with a lot of companies recently, my companies and other organization companies. We've been fixing stuff up and down, and it's taking a huge chunk of my time and my day. A little bit of interesting fact. I woke up today. I thought it was Monday already. I was already calling banks and all of that stuff. Just to show you that I work practically almost every single day from my eye opening to the time my eye goes back closed. I'm working. So as I figured that today is Sunday and I have a little bit of time, so let's just jump on this and do a little bit of analysis. Now, for guys that have never been here before, welcome. From guys that have been with me, thank you very much for sticking with me. And just a little bit of information. This is for educational purposes only. I'm not trying to sell you anything, but there is memberships for you to get if you want to learn more. But it's primarily for educational purposes only and to help, a lot of you guys see the financial market in a totally different light. Now, let's get straight to it. So for people that have never been here before and you don't know how we deal, there's something called COT report, Commitment of Traders report. There's a free report that is posted, uh, every week by I think it's FTIC. I can't remember now. It's been a while I've been on the COT reports. Most of this stuff are running automatically in the background, but it's posted by, I think it's FTIC. Or if you search online, you see Commitment of Traders report. Let me see if I can get on this site quickly. No, CFTC, that's the word, CFTC. So it's posted by the CFTC every week. And this indicator shows us what the big guys are doing, what the commercial, non-commercials, and non-reportable are doing. Commercials are like people that mine gold, for example, or people that make physical products that you can hold, or maybe some, electronical products or assets that you can hold. And non-commercials are like people like you and I, banks, hedge funds, and all of those guys, that in there doing, trying to make money off of the swing of the market if it's going long or if it's going short. Long means it's going up, short means it's going down. So basically this gives us an insight to what the big boys are doing, and we tend to want to follow them. Now, a lot of you that have never been here before might think, oh, let's follow what the banks are doing, what the big banks are doing. Keep in mind, the big banks has a lot of funds, that they can use to offset their losses, while retail traders, a lot of them don't have that much funds. So we normally suggest and recommend you go with commercials, which are the producers of this, because most of them have so many things, so many information that they're not really, their primary objective is not to make money from the market, but to make money from their produce, from whatever they're producing. So they're more on a safer side to bet on than the non-commercial guys, which are more speculator based information. So we focus more on guys like this. Now, we're not looking into this at the moment. I look more into assets like stocks and indices. But commitment of traders report that you're seeing here is also similar to this information that you have here, the SEC, right? Open Insider. And this is just exactly the same. It shows you what the big guys are doing. So when we're talking about big guys, we're talking about the presidents of the company, we're talking about the CEO, we're talking about the CFO, the VP, the directors, and all of that stuff, all what these guys are doing, right? And this is just like the producers or the commercials in CFTC. So we have CFTC to cover us on indices, on what's it called, on live produce, on the FX side, on gold and all of that. And then we have this open insider to cover us on stocks and everything else that I want to look at. So we have a very broad look or outlook into the market as it stands at the moment. Okay. So we have both sides covered. And now, how do we use this tool? Now, we don't only use COT report, we use other tools such as seasonalities. So seasonalities is how the market has moved in a specific season. So let's say in the past, let's just check Facebook, for example. Let's say in the past 5 years, how Facebook has moved in the past 5 years, and it does an average of that over time. And then what we tend to see is the average of the price movement of Facebook over time. Maybe from this one, for example, from 2019, for example, you can see that around this period, in the past 3, 5, and 7 years, what we can see is around the 27th of March, Facebook tends to go bullish, and then the bull run ends just before summer, just around summer, so 24th of July, and you see that drop. So it's something that's happened not just once, not twice, but a few times in the past 7 years. And that's why we use this tool. It's a very powerful tool. So how we use this is we mix this with the COT report. Now, if your COT report is telling you that these guys are going long, they're buying, for example, and let's just see, let's look at Facebook, for example, I think. Uh, says ticker, but I'm just going to put Facebook there. What's the ticker for Facebook? Hold on. It's, no, it's Meta. Okay. Meta should be the ticker for Facebook. All right. So now you can see Zuckerberg's position itself. You can see what Zuck is trading, right? So Zuck was trading in his company. What was he doing recently? As of August, he sold in August, right? So it was selling in August, right? And if you look at your COT report, seasonality, what we can see, let's see around August, what happens? You can see around August as well, the market tends to dip around that period. So these guys are quite robotic or quite, we wouldn't say predictable, but they're quite seasonal in what they do. And you can see most of the position he has sell all the way from even as far back as June, I think in here he's been selling. And he's been selling not too much, but he's been selling, let's see, 4% here. You can see the value right here, what he's been selling. He's been selling 12 million, 11 million, 12 million. So indirectly, he could be a market maker in his own, in his own jurisdiction. He's moving the market by himself based on the trade that he's making. And you can see that reflect on let's say Yahoo Finance, for example. If we go on Meta on Yahoo Finance, see what's been happening during those period of time. Now, I'm only showing you this. I'm not trying to do any analysis for you guys. I'm just trying to show you, what the possibilities are and what type of tools are available to use, for you to help you move forward in your investment journey. So change that to candle. So we can see around August. He's been selling from August, right? But you can see there's not much movement. There's not much movement happening here. So let's just shut that, make that a little bit more broad. And you can see there's not much movement happening. He's been selling from August. Market start dropping around August 13th, right? And start dropping like that, right? And there is a top tool to help you pinpoint a lot better, right? And that tool is called probability. So if market was dropping from around let's say around 12th, 13th of August, and he's been selling, he sold on the 13 right here, right? But he's been selling prior to that. You can see he's been selling heavy before the market reacted, right? What we can do is we can come and check this. This was telling us that we should start selling from 24th, right? On the 24th of July. That's when he says the short is meant to start happening. Now, if we go back to that 24th, that's around here. You can see there was a slight drop, but the market gapped up, right? So how to avoid the gap? Because you can just say, oh, because seasonality is showing me to sell, I'm just going to sell and wait. It's not going to happen, 100% of the time like that. If we look back at this trade, you see all of this, you can really ignore all of these sell times when it was telling you to sell in June because seasonality was not aligned. But when seasonality aligned right here around the 24th, you want to look at what's it doing around that period, right? We go here and you can see around that period, it didn't do anything. So in reality, you're not even meant to touch this around that period, right? Only until the 31st, then he sold. But the position that he sold was 12 million. And when did he sell it? 31st, right? Now, if we go back to seasonality, right, we'll go 31st. You can see right here where he sold right here. It's not the perfect alignment. This is telling us you're going to have a small short and then you're going to have a gap to the top side, all right? And if we go here, let's see, when did he sell 31st? He sold right here. You see the market dropped a little bit and then started moving back up, right? So you have to find the exact time when seasonality is pointing to the direction you want it to go, around maybe the 8th right here that's going down, and then look for him. Is he selling around the same period? He sold on the 8th as well. Now there's one more tool, which is probability. But before we get to probability, let's look at this, right? So we go here and then you can see on the 8th, right? If you sold on the 8th, market is going to gap against you, but eventually start coming back down. So it's going to gap a few days against you right here, and then it's going to come back down. That's where your third tool comes into play, which we call probability, right? There's low probability up. Now, probability has not been updated for a while, so you're going to have to bear with me. It doesn't have a Facebook here at the moment, but it's one of those ones we're looking into. But let me just give you an example of what probability looks like, right? Probability is the last tool that tells you if I should go in or not. So this hasn't been updated. Bitcoin one hasn't been updated since 2022. But probability has the whole year mapped out for you. And what you look for is on that 8th, for example, that is looking to sell, is probability telling us to also sell on that day. So if probability is not saying sell and it's telling us buy, of course, this is Bitcoin one. This is not, the one for Meta. So if probability is telling us to sell on that day, then we add that into our consensus. Now we have probability showing us to go short. We have COT that shows us to go short. Let me just, right. So we have, I'm trying to see if I can load up a notepad somewhere here for you guys. But all right, let me just see if I can. All right. Let's see if I can get a notepad up. So if probability is saying short, COT or inside trader is telling you short, and then you have your seasonality also telling you short, that's a strong indication to sell, right? If you have all three showing you short, that's a strong indication for you to sell the asset and to go down. But if one is telling you long and the other one is telling you short, then you should stay away from the market. So you should only go into an asset only when all three are aligned in your favor. And that's only when you trade the asset. So remember, this is for educational purposes only. You're not going to get it right 100% of the time, but this stacks the odds in your favor a lot more. Now you can incorporate your support and resistance, you know, your support and resistance, your entry indicator. We have a bunch of that on the side right here. Indicators and your take profit and your SL, you can use your ATR, average true range. So these are all technical side of the stuff. And then these guys are right here on the fundamental scale. So you have some of them can be classified as technicals on the fundamentals as well, but I tend to classify them myself, as I said, personal education, for you guys, myself as fundamentals. So these are guys are like my fundamentals, and these guys right here are my technicals. So once I have all of this, then I set my EA to start looking for entry on this and then sell and go towards that direction. So guys, I'm just trying to show you the power that you have, on setting. Some of this information are actually just free to get. The seasonality is on the site, loading on our site, so you have to pay membership for that. But all of the COT report, the open insider, those are free information for you to have and utilize whenever you want to utilize them. Okay, guys, that's all I have for you today. I'm just trying to show you the possibility of what's happening or what's available to you and how you can use this on your asset journey. I can't really guarantee that I can't guarantee that I will post. I can guarantee you guys that I will post as frequent as possible, but I can guarantee that every now and again when I get some time, I can hop on here and do one or two sessions for you guys. So I really do appreciate you guys for joining, and I'll catch you on the next one. All right.